The recovery is complete, says the Economic Survey. Projects 7% real GDP growth this fiscal and 6.5% real GDP growth and 11% nominal GDP growth next fiscal. The survey also says government is on track to achieving fiscal deficit target of 6.4%. The Economic Survey warns entrenched inflation may prolong the monetary tightening cycle, keeping borrowing costs higher for longer. Survey also adds lower oil prices and a better current account deficit position will make the external situation manageable. The Economic Survey calls for private capital expansion to take up a leadership role to fast-track job creation. Also identifies digitization reforms and diversification of global supply chains as crucial growth magnets for this decade.
भारत का बजट विश्व जो आशा की किरण देख रहा है उसे वो और अधिक प्रकाशमान नजर आए.
The budget session of Parliament kicks off. Prime Minister Modi says the world is watching India's budget with hope and amid uncertainty. The International Monetary Fund expects Indian economy to grow at 6.8% this financial year, calls India a bright spot and cuts the global growth rate below 3%. Institutional investors and high net worth individuals rescue the 20,000 crore rupee Adani follow-on public offer on the last day. The issue is fully subscribed, even though the retail book gets just over 10% bids. Investors tread with caution on the Lal Street ahead of the budget. Sensex and Nifty end with day with marginal gains. Mid-caps and banks outperform. Sun Pharma meets estimates in the third quarter with 5% profit growth and 14% revenue growth. Margins move closer to 27%. Visakhapatnam will be the capital of Andhra Pradesh, says Chief Minister Jagan Reddy. Invites investors to visit the city next month when it will play host to a global summit.
भारत का बजट विश्व जो आशा की किरण देख रहा है उसे वो और अधिक प्रकाशमान नजर आए.
हम दुनिया की 10वें नंबर की अर्थव्यवस्था से 5वें नंबर पर पहुंचे.
I rise to lay on the table a copy each of the following papers, Hindi and English version. Economic Survey 2022-23.
The budget session of Parliament began with President Draupadi Murmu's address to the joint sitting of both the houses. Finance Minister Nirmala Sitharaman will be presenting the union budget tomorrow. This is the last full budget before the general elections in 2024. It shall also be the last budget presented in the current Parliament building, as with tradition, the day before the budget, the Economic Survey was tabled today. The key message in the survey this year is, and I quote, "The recovery is complete. This is the first economic survey since the start of the Russia-Ukraine war." The 371-page document highlights that prudent assumptions in the last year's budget provided a buffer to the government during global uncertainties. The survey highlights that India has moved on from its encounter with the pandemic. It projects real GDP growth of 7% this fiscal. It also forecasts 6.5% real GDP growth and 11% nominal GDP growth in FY24. The survey says the government is on track to achieve its stated fiscal deficit target of 6.4%. It stresses that the availability of fiscal space is paramount, given the global uncertainties that persist. The survey also warns that entrenched inflation may prolong the monetary tightening cycle, keeping borrowing costs higher for longer. However, it adds that there are two silver linings. One, lower oil prices, and two, a better current account deficit position. These factors, it says, will make the external situation manageable. The survey also provides a nudge to the private sector, asking them to take up a leadership role on the capex front and build capacities that will fast-track job creation.
We have a financial cycle that was disrupted in the second decade. That is coming back. And we have the new development public digital infrastructure that is adding another 30 to 50 basis points. So together, these two developments add about 50 to 100 basis points to the trend growth which many organizations pegged for India at 6%. And that is why my optimism is that in the coming decade, rest of the decade, the potential GDP growth without taking into account export potential, because the global economy is still rife with uncertainty, the growth rate could be around 6.5% to 7% rather than between 6 and 6.5%.
All right, to help us understand the nuances of it, I'm joined by Lata Venkatesh on the broadcast. Lata, the GDP estimate is higher than what the street was expecting. What are the reasons behind this?
Well, the CEA has elaborated that, yes, most of the people in the street are expecting 6%. CNBC-TV18 poll is also 6%, but he's going with 6.5%. Now, actually, the corporate balance sheets over the past few years has improved, he points out. Leverage, debt is much lower. Bank balance sheets have improved, gross NPAs have come down, and the capital they have, CRAR, capital risk-weighted adequacy, is up at almost 16%. Government reforms like GST, the bankruptcy code, the ease of doing business, the PLI, all these could not flow through in full force because of the pandemic. But now with the pandemic practically behind us and, the capex cycle picking up, you can see incipient signs. Credit offtake has clearly gone into double digits. All this means that India should be able to, in the normal circumstances, easily put a 6% growth. He is adding to it another 50 basis points because of the impact of the digital infrastructure that has already been put in place. UPI, the JAM Trinity, the direct benefit transfer through bank accounts, Jan Dhan accounts. All these have not had a good play, but now they will have a smooth play. And therefore, he's expecting a 6.5. And he says if you go on with this logically to the future years, from 2023 to 2030, India should enjoy a potential GDP growth of 7 to 8%.
Right. Lata, the survey also makes a clear case for fiscal prudence. What do you make of the commentary on the fisc?
Well, first, the key takeaway is that he says tax buoyancy has improved. By buoyancy, you mean for 1 unit of GDP, how much do taxes improve? And, he gives some very good data. For instance, the GST data. If you look at the taxes that have gone into the GST, the sales tax, etc., he points out that for the FY13 to FY17 period, taxes grew annually by 11.53%, although nominal GDP grew higher at 11.54%. So for 1 unit of GDP growth, only 0.9% of taxes grew. But for the post-GST period, FY19 to 22, GST has grown by 10.9% annually, although GDP grew, nominal GDP, by only 9.6%, which means for 1 unit of GDP growth, you had a 1.1% growth in GST. This itself means that taxes will be very buoyant in the coming years as well. Then he points at other, improvements in the fisc. Capex, capital expansion, in the 2009 to 20 period was only 1.7% capital expenditure as a percentage of GDP. But in FY23, it has risen to 2.9%. Higher the capital investment, higher the output. The other, cleaner parts of the improvements in the fisc are that extra budgetary borrowing. Down the line, borrowing which you don't show to everyone. Extra budgetary borrowing used to be as high as 1.4 lakh crore 2-3 years ago. Now it has come down to zero. FY22, it came down to 750 crores, and now FY23 to zero. That's again a sign of transparency. Direct taxes buoyancy is also very high. He points out that from FY13 to FY19, pre-COVID, direct taxes grew annually by 13.9%. But you look at the latest data, FY23 data, April to November, it has grown by 15.5%. Again, showing greater tax buoyancy. GST, we already showed you that the tax buoyancy is very high. Number of people who are paying GST has risen from 70 lakhs when GST started to 1.4 crore in 2022. And that's why he's going at the end of the chapter to say that if we are able to reduce fiscal deficit, fiscal prudence, then the cost of capital for the entire economy will be less, and that will mean higher growth. The tone of that chapter seems to indicate that they will go for a lower fiscal deficit. As well, my sense is because they're expecting a higher GDP, nominal GDP of 11%, they may even go for a higher tax expectation of probably 12%.
All right. Thank you so much, Lata Venkatesh, for helping us understand the nuances of these important concepts. And now, moving on to the day's market action. Caution on the last street ahead of the union budget. Sensex gained nearly 50 points. Nifty also managed to marginal gains and banks and mid-caps outperformed. Nifty Bank Index gained over 250 points and the Nifty Mid-Cap Index gained nearly 500 points. The IMF's latest World Economic Outlook report says that India remains a bright spot amid a slowing global economy. The fund sees global growth slowing further in 2023 amid some signs of resilience and reopening of China. It also says that the fight against inflation is starting to pay off. Ritu Singh joins in with the details. Ritu, take us through the highlights.
Well, I'll start with India first, where IMF has retained the growth forecast for this fiscal and the next. So India's GDP is seen growing by 6.8% in this year, slowing to 6.1% in FY24 before returning to 6.8% GDP growth by FY25. But that said, IMF did highlight that India remains a bright spot, and together with China, it will account for half of the global growth in this year versus just a tenth for the US and Euro area combined. Global growth is projected to fall from about 3.4% in 2022 to 2.9% this year before it rises to 3.1% in 2024. Now, while the forecast for this year is 20 basis points higher than earlier estimated, it is still below the historical average of 3.8%. IMF says the rise in central bank rates to fight inflation on one hand and Russia's war in Ukraine continue to weigh on economic activity. This decline in global growth is going to be driven by advanced economies, where the slowdown is going to be more pronounced, with 9 out of 10 economies there likely to grow slower. The emerging market and developing economies growth is estimated to have bottomed out in 2022 itself. Now, the balance of risk to this outlook remains tilted to the downside, but IMF believes that the adverse risks have come down. It says that despite these headwinds, global growth outlook is less gloomy than it had earlier anticipated, and that could represent a turning point, with growth bottoming out and inflation declining. A quick word on the inflation, where about 84% of the countries globally are expected to have a lower headline CPI inflation this year compared to the previous year. So global inflation is expected to fall to 6.6% in 2023 and 4.3% by next year. Oil prices projected to fall by about 16% and non-fuel commodity prices by 6.3% on average, according to the IMF.
All right, thank you, Ritu, for those details. Moving on to today's earnings now. Sun Pharma reported a mixed bag, with revenue and net profit beating street estimates, but EBITDA and margins missing the mark. On a year-on-year basis, the company reported robust growth across all categories, with both revenue and EBITDA clocking double-digit growth. It wasn't just domestic growth. Sun Pharma's US sales grew more than 6% year-on-year, with global specialty sales rising more than 20% versus last year's figures. Indian Oil Corporation reported a weak set of numbers in the October-December quarter, as its net profit and operating margins missed street estimates. Net profit came in at nearly 450 crore rupees, much lower than expectations of over 3,200 crore rupees. Operating margin came in at 1.8% against expectations of 3.8%. However, the company's third quarter revenue of more than 2 lakh crore rupees beat street estimates. Mines and Minerals major Vedanta has shelved plans to sell the Sterlite copper smelter unit in Tamil Nadu. The plant that was shut due to environmental concerns accounted for almost 40% of the metal production in the country. The company has now decided to work with the local population to restart the plant. On to the telecom space. Vodafone Idea's board of directors are set to meet today. The board meet will consider preferential issue of operationally convertible debentures to tower company ATC. Further, Vodafone Idea's board will also explore convening an extraordinary general meeting to seek approval of shareholders for issuing debentures. This after the company had informed stock exchanges in November 2022 that the resolution had lapsed due to stalemate in conversion of government dues into equity. The Financial Services Institution Bureau has recommended names of M. Jagannath and Tablesh Pandey to take up the post of Managing Directors at Life Insurance Corporation of India. The final appointment will be approved by the Cabinet's Appointment Committee. Currently, the insurance behemoth has 4 MDs, 2 of whom are set to retire soon. And it's time for a short break, but when we return, we'll take you to Surat to find out the wish list of the textile industry out of the budget. Stay tuned.
देखो 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 नया टीवी देखो aha got the veggies from Chotu's shop. He gives the right rate.
Yes, Papa.
Decided 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
बीते कुछ सालों में उठी आर्थिक, वैश्विक और जियोपॉलिटिकल चुनौती के सामने भी रियल एस्टेट सेक्टर डट कर खड़ा रहा। अपनी प्रगतिशील सोच, आधुनिक समाधान और नवीनीकरण के दम पर रियल एस्टेट के इन्हीं अचीवर्स को सम्मानित करने के लिए आ रहा है RR Kabel presents CNBC Awaaz 14th Real Estate Awards, powered by News 18 Network.
Presented by RR Kabel, associate sponsor RR Parkon.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
Grow your business in partnership with Meta and Startup Street.
So around 2018 is the time when I got introduced to Country Bean. At that time, we just got married, and this was a side hustle for me. Project that we used to work on very passionately, sort of nights and weekends. And from there on, the challenge in front of us was how do we take this to the rest of India.
The adoption to digital has totally changed the game for us as a company. We've been able to reach lakhs of customers across the country, and that too in a time period of about 3 to 4 years instead of 7 to 8 years.
Grow your business in partnership with Meta and Startup Street.
Over the last 2 years, there has been a big upheaval in global supply chains. Can India use this as an opportunity to help expand its manufacturing industry? Can the project provide the necessary impetus which help put Indian factories at the heart of these supply chains? Watch the most experienced team decode the budget for you and help you understand how the budget impacts your investments and your portfolio. Watch Budget 2023 on CNBC TV18, your budget headquarters.
Budget 2023, Resilience to Resurgence.
Co-presented by LIC, Har Pal Aapke Saath. Driven by XUV 400, we fun, we fast, we electric. Co-powered by Panasonic, create today, enrich tomorrow. In association with Bandhan Bank, Aapka Bhala, Sabki Bhalai.
Axis Mutual Fund presents Axis Business Cycles Fund NFO, an opportunity for you to be a part of India's growth story. NFO opens February 2nd. Log on to accessmf.com or speak to your mutual fund distributor or registered investment advisor today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. Institutional investors and high net worth individuals rescued Adani Enterprises' 20,000 crore rupee follow-on public offer on the last day. The issue got fully subscribed, led by qualified institutional buyers and non-institutional investors. However, the retail book just got over 10% bids. Yash Jain joins us with the details.
Well, as the management has also indicated, and was the feedback from the market also, that the Adani Enterprise FPO will sail through primarily, on institutional support, and that's exactly what paid out. We have the subscription figures at the end of the final day, that is day 3. And as far as the complete FPO is concerned, it has been subscribed 1.12 times. If you look at category-wise subscription, the strongest category, one of the 2 strongest categories, QIB was subscribed 1.26 times. Here, the total number of shares offered were about 1.28 crore. Demand was received for about 1.6 crore shares. Nearly 80% of the QIB book has come from FIIs. Now look at the second, biggest category, HNI book. That was subscribed 3.32 times. Bids worth more than 10 lakhs. That received subscription of nearly 5 times. Less than 10 lakhs got subscribed about 2%. Almost entire HNI demand came from large HNIs, that is bids more than about 10 lakh rupees. Retail book, that saw a very slow response of about 12%. Employees also subscribed about 55%. Under the employees category, the total number of shares which were offered were 1.6 lakh. Demand was received for just about 86,000 shares. As far as, the conditions for this FPO to go through are concerned, there were 2 conditions. One is required 100% of subscription as far as the QIB portion is concerned, and 90% as far as aggregate book is concerned. Both those 2 conditions have been met, which means that Adani FPO has managed to essentially scrape through on the last day.
All right, thank you, Yash, for that. Meanwhile, the sell-off in Adani Group stocks has led to wealth erosion of Chairman Gautam Adani. The billionaire has slipped out of the list of the world's top 10 richest persons. As per Bloomberg Billionaires Index, Adani's wealth fell by around $34 billion in 3 trading days. He has fallen from the 4th spot to the 11th. Moving on, nearly 90% of India's synthetic cloth requirement is met by Surat's textile industry. But this 85,000 crore industry, sari-dominated industry has not been able to cater to changing demand trends. That, coupled with rising cost, has forced several mills to shut shop. CNBC-TV18 Shilpa Ranipeta reports from Surat that the industry is now hoping Budget 2023 will offer incentives that will help them shift towards ready-made garments and tap into exports.
Surat. It's home to India's largest synthetic fabric market. It houses over 75,000 textile traders who produce over 4.5 crore meters of cloth every day across around 400 processing units and 8.5 lakh power looms. These are then sold in 200 wholesale markets, which house over 70,000 shops and employ 15 lakh workers. But this textile hub is facing an unprecedented crisis. Over the past few months, sales have hit a record low. Already, nearly 70 processing and dyeing units have had to shut shop.
अब यहाँ पे प्रोडक्शन तो कुछ काफ़ी बढ़ चुका है, लेकिन यहाँ पे जो समस्या आ रही है, सेल की समस्या आ रही है। डोमेस्टिक में भी जिस हिसाब से सेल हमारी पहले हो रही थी, उसमें बहुत दिक्कत आ रही है, क्योंकि महंगाई जो है सूरत कपड़ा मार्केट को बहुत इफेक्ट कर रही है। जो कपड़ा की जो कैटेगरी होती है, वो सबसे लास्ट में लोग यूज़ करते हैं। इस टाइप से महंगाई बढ़ गई है, तो उसको देखते हुए जो कपड़ा हमारे लास्ट में सेल परचेज करने में आता है, तो हमारा प्रोडक्शन जो है बहुत ज़्यादा है, लेकिन हमारी सेल नहीं हो रही।
The big problems? Rising prices of imported coal and lignite coal and low demand.
जैसे पहले हमारा फ्यूल का कॉस्ट था, जैसे कोलसे का कॉस्ट था, किसी का 75 पैसा, किसी का 1 रुपया। आज 2.5 पौने 3 रुपये से किसी का भी कोलसे का कॉस्ट नहीं है पर मीटर, चाहे वो ऑर्डिनरी कपड़ा होवे या मीडियम स्केल होवे या हाई स्केल होवे। तो सबसे बड़ा जो इफेक्ट हुआ है, जो इंटरनेशनल मार्केट में भी कोल के दाम बढ़ गए। और पहले क्या था, कोलसा हमको महीने 2 महीने की क्रेडिट पे मिलता था, आज हमको एडवांस पेमेंट देना पड़ता है या अगेंस्ट डिलीवरी देना पड़ता है।
Changing fashion trends have also thrown a curveball. People are choosing ready-made garments over saris, and that's not good news for a sari hub.
हम आने वाले युग को पहचान नहीं पा रहे हैं। आने वाली जो लेडीज है,
वो साड़ी की जगह अभी ड्रेस है, कई चीज़ आ गई है, चाहे गाउन है, चाहे लहंगे है, चाहे कोई भी कई चीज़ें आजकल आ गई है, डेनिम भी आ गया है। तो हमारे को उस तरफ ध्यान देना पड़ेगा। तो उस तरफ ध्यान देने के लिए अब सेटअप करने के लिए इसमें स्किल्ड कारीगर हमारे पास नहीं है।
This means workers will have to reskill themselves, and that's where the industry hopes the government will step in.
अभी आज की तारीख में उन पे काम करना चाहिए, उसमें स्किल लेबर तैयार हो। हमारे का रिसर्च डेवलपमेंट के लिए भी कोई भी प्लानिंग करे ताकि नए नए फैब्रिक को हम किस तरीके से लोगों को इंट्रोड्यूस कर सकें। ट्रेडर्स को एमएसएमई में लाने के बाद, परंतु जब वो लोन लेने जाता है तो उसको बोलते हैं तेरे को मॉर्गेज लेके आइए या उसमें ये चीज़ रखिए, उसके बाद इजी लोन तो नहीं मिलता उसको। छोटे छोटे व्यापारियों ने सूरत को डेवलप किया है, उनकी खूबसूरती छोटे छोटे एमएसएमई से है, तो उस एमएसएमई को सपोर्ट करके करना चाहिए।
Surat's textile industry has also been urging the government to set up a garment hub to help pivot towards ready-made garments. It's a demand that's 5 years old and one that's fallen on deaf ears. Now, being able to manufacture ready-made garments will not only help them cater to the growing domestic demand, but will also give them the opportunity to trade internationally to tap exports. Now, this is given that currently less than 5% of the textiles or the fabric made in Surat is exported. And this, they say, will give them a massive opportunity in a tepid demand environment. In Surat, with camera person Ajay Dabolkar, Shilpa Rani Peta.
And with that, it's a wrap on this edition of News Centre. News continues on CNBC-TV18. Stay tuned.